I am Mr. Iyer. Welcome to VCE Unit 4 Accounting Balance Day Adjustment. We are going to continue from where we left in the first YouTube of prepaid insurance in Sunshine Industries. The prepayment was for 3 months. Now we are going to see what happens to that adjustment in the subsequent period. We took the example of balance day adjustment on 30th June 2023. Now the subsequent period is from 1 July 2023. What happens to that prepaid in case the bookkeeper or assistant accountant employed is recording or dealing with the prepaid and accrued ongoing, or the bookkeeper or assistant accountant employed does not deal with prepaid or accrued recorded in the previous financial year. We also know that we have seen this slide of a task from VCE Unit 4 Accounting. What they want is the student to show they can calculate the amount of prepaid and accrued, that they know to calculate the amount of prepaid, calculate the amount of accrued. For this, you have to know the date on which the amount has been paid or received, for what duration, for how long that money paid or received is usable. These two I have got in different color so that you understand that these two variables you are going to make use in order to calculate the amount. Balance day adjustment date, usually if it is not given, it is 30th of June every year in Australia. Otherwise, you have got to pay attention to the date of balance date given in your exam. I have got GST, if any, these two in different color, because GST is not going to impact your calculation of amount prepaid or accrued, because GST is neither an expense nor an income for a business. So this is not going to make any difference to your calculation. Although the balance date can make a difference to your calculation, usually it is taken for granted 30th June, so I have got it in different color. So these two are the things that you are going to pay more attention to for calculating amount prepaid or accrued. And once you calculated, the second part of your task is how you are going to record these adjustments. 1 and 2 refer to prepaid expense, accrued expense. 9 and 10 refers to prepaid income, accrued income. So how we are going to record these 4 in general journal, general ledger, and income, how it appears in income statement and balance sheet. Now I have taken only 4 of this. It doesn't mean you can be tested only on these 4, how to record that in general journal, general ledger, etc. I took these 4 because they are all related to one another. But otherwise, you can be tested by VCE on any of the 10 adjustments I have listed down earlier. For all these 4 or 10 items, whenever the transaction took place, you have to show it in general journal, general ledger, income statement, and balance sheet. This is the normal thing you would have learned in your VCE Unit 1. Whenever the transaction takes place, how it is recorded in general journal. So there is nothing new you are going to learn in this module in Unit 4, how to record all these transactions when they are taking place in the business. So this is not new you are going to learn here. But what you are going to learn, I have got it in different color here that says you are going to learn about all these 10 adjustments, how to record that in general journal, general ledger, how they appear in income statement and balance sheet, on the balance date. So that is what the topic is about. That's what the unit is about. You have to know how to record it on balance date, and you may also have to know what happens in the subsequent period, that is after the balance date, what happens to all these adjustments in subsequent period to mean after the balance date. You may be familiar with this slide that I had in previous YouTube. You have to show the impact of the balance day adjustment on the accounting equation and the impact of balance day adjustment in the income statement and in balance sheet. We also may be tested how this is going to impact the trial balance if the trial balance is given to you before all these balance day adjustments. You have to show how the trial balance will appear after the balance date adjustment. So you have got to see how the trial balance is going to be impacted because of prepaid and accrued. We also have to show the impact of that in cash flow statement. Cash flow statement has been legislated as part of financial reports, like how you have income statement, profit and loss statement, balance sheet, and one of the other thing in the financial report is cash flow statement. To show where the cash came from, where the cash went out, you may be expected to show how these balance day adjustments lead to cash inflow or cash outflow, and in which part of cash flow statement it will impact. So we are going to see that too. This example you are already familiar. I had this already in the previous YouTube. It's an insurance expense paid in Sunshine Industries on 1st of October 2022. Balance day is ending on 30th of June 2023 for this year. From the date it was paid, 1/10/2022 to 30th June 2023, the total number of months it has been used up is 9 months. The amount paid for insurance is 1,800. GST on that is 180, and I have got it here. No balance day adjustment is required for this 180 because we are not going to allocate the GST, as it is neither an income nor an expense for the business. So we cannot deal with this on balance day. The total paid is 1,980, 1,800 for insurance, 180 for GST, 1,980. But all these are in different color because they are not going to impact you now. What you are going to do is only with this 1,800 I have bold faced and put in a different font color. This we assumed it was paid for 12 months period. So we have to understand 1,800 is for 12 months and calculate how much it is for 1 month. So when you go for 1 month, you divide this 1,800 by 12, you get 150 per month. We already have understood that we have used the insurance for 9 months. 1 month is 150. We used it for 9 months. So the expense until the end of the year is 1,350. After the balance date, although it is useful for 12 months, till balance date we used only for 9 months. So we paid in advance for 3 months. So paid in advance for 3 months, per month is 150. Multiplying these two, you get the amount paid in advance 450. So the adjustment is required only for this 450. By doing this calculation, we have sorted out the first task of VCE, making you to calculate or allocate the expense between what is used up and what is still to be used. What is used up is an expense. What is still to be used is prepaid. We also have seen how this appears in Sunshine Industries in the General Journal in the year-end closing on 30th June 2023. Prepaid insurance is an asset, is a current asset. we can get the benefit of this 450. So we have got this on the debit as an asset. Insurance is an expense. We credit it because that was not an expense for 30th June 2023. So we credit insurance to say it was not an expense for 2023. On the same date, we create the profit and loss and balance sheet for the business. So profit and loss has got to compare the income and expense to identify the profit earned or loss incurred. I have got profit and loss on the debit 1350, insurance on the credit 1350. Where this 1350 came from, you know, we had in the previous PowerPoint slide, we have 1350 as the amount of insurance used up before 30th June 2023. 9 months of 150 each. This is for 9 months, this is for 3 months, and the total 1800 was taken as an expense at the time when it was paid. But towards the end, we have got to allocate what should be taken in profit and loss and what should be considered as an asset. We put insurance on the credit so that the expense account will be zero. These two will go on the credit, and when it was originally paid, insurance account would be debited. So debit was 1800 and the credit is having two entries making the total 1800. So account will not have a balance. One of the conditions of balance day adjustment is the expense and income accounts should be zero. So you can see that insurance will be zero here. To make it zero, whatever was the amount in insurance account, we are placing it in profit and loss. That's why profit and loss account is debited. Profit and loss account is a revenue or expense account. When it is on the credit, it's a revenue. When it's on the debit, it's an expense. And here, insurance is the expense we are transferring to profit and loss to find out the profit made or loss. This is the slide we have already seen in Sunshine Industries in the general ledger. The entry that we have seen earlier in insurance as an expense account when it was paid on 1/10/2022, 1800 was paid. That appears in the bank as current asset on the credit. 1/10/2022 insurance is credited 1800. Cross-referencing, we should be able to see in insurance which other account is affected. We find bank account is affected. So in bank account, we say which other account is affected, insurance account is affected. So this 1800, the cross-referencing means this 1800, we will find it in insurance account. And in insurance expense account, we have the cross-referencing bank. That means we can see that in bank account. Here in the classroom, it can be so easy because everything is in one page and you can see the example of each ledger account. But in reality, the ledger pages will be for each account. It may be running into different pages. So insurance can be on one page and bank account can be somewhere else in the same ledger. In a manual ledger, the page numbers has been having a difficulty to turn the pages and go on. But in computerized these days, we don't have much issues of turning the pages, but we still need to have cross-referencing to show which account is affected or in which other account you can see the same amount. GST clearing, it's a current liability account, and on the day when it was paid on 1/10/2022, 180 was paid. By putting it on the debit side, we are saying the liability is reduced because whatever you paid to any expenses, GST, that amount of GST you don't have to pay to tax office. So we reduce the current liability. The same one on 1/10/2022, the GST clearing appears in bank account on the credit. The cross-referencing in GST clearing is bank, and in bank account cross-referencing is GST clearing. Now this part is what happens on 1/10/2022. That's on the day when the transaction takes place. That's why you can see the date 1/10/2022, 1/10/2022. Now we have to see what happens on the balance date. On the balance date, year-end closing, we recognize there is a prepaid insurance current asset. We bring in the asset insurance on 30th June 2023, 450 on the debit. The cross-referencing for this, we have to put this in insurance, so we can go into insurance account on the credit side, 30th of June 2023, 450. By taking this account insurance expense account on the debit 1,800 on the credit 450, there will be a difference of 1,350 that should be transferred to profit and loss. That way the debit total, credit total of insurance is equal, no balance is carried over because it is an expense account. Expense account, income account should be close to zero. So profit and loss account will have 1,350. You can see that in profit and loss for the year ended 30th June 2023, insurance will be 1,350 and not 1,800. GST clearing is a current liability, can have a balance on that date. So we have got a balance of 180 here on the debit. That will be closed by transferring that as a balance in current liability on 30th June 2023, 180 is a debit balance because the entry is only on the debit. Bank account is a current asset account. This account also is allowed to have balance on balance date, and we have on the credit 1,980. I took the example where there is no debit entry at all. This is not very realistic because you can't pay the money without having the money in the bank account unless you have got an overdraft facility. So I have taken the 1,980 as a balance carried on the credit side. So it will appear in the balance sheet as a credit balance or overdraft. In the year-end closing, prepaid insurance as a current asset, we had on the debit side 450. We close it to balance 450 on the credit. So it will go in the balance sheet as a debit balance prepaid insurance. This is the example I have taken with a few numbers at random, but the one that is connected to our example I have highlighted in yellow and sandal color and also yellow color here. These three amounts were already seen by us in the general journal and general ledger. Bank account credit balance 1,080. GST clearing debit balance 180. Insurance, when it is paid, it will have a debit balance 1,800. Trial balance is nothing but a list of all accounts in the ledger, the names of all ledger account items, and their respective balance on the credit or debit. As we close the accounts on 30th June, their balances are found, and we bring all those balances from the ledger. If the ledger is on the credit, we bring the credit balance. If the ledger is on the debit, we bring it on the debit, and so on. And trial balance tries the debit and credit to be equal. So it's called trial balance. So it's not part of your accounting records. It's only a piece of paper where you put all the names of all the accounts and bring down all the ledger balances according to if it is on the credit or on the debit, and then you total up the debit and credit to see they match. That's a trial balance when no adjustment to insurance was done. Now our task is to allocate this expense between asset and expense. That's a task. This 180 doesn't change, and this is the amount of money paid out of bank. Now we see how an adjusted trial balance will. Sunshine Industries adjusted trial balance on this date. No change to bank account. No change to any other account including GST clearing. But the change is for insurance because that's a task for the balance sheet adjustment to identify how much is the expense for the year and how much is paid in advance as an asset for the next year. So 450 here, prepaid insurance will appear on the debit as an asset and insurance as an expense for the year 1350. The totals do not change because we didn't change any other amount. We only divided 1800 into 2. This is how the cash flow statement of Sunshine Industries on 30th June 2023 appears. For convenience, I go from the bottommost cash flows. The third and the bottommost cash flow is cash flow from financing activities. Cash flows from financing activities deal with the equity and non-current liabilities only. So we take the amounts for this only from the equity in the balance sheet, the non-current liability in the balance sheet. So what if there is an increase in capital, the cash comes in, so we have to enter a positive amount. What if we have got an increase in loan borrowing, money comes in, that's a positive. What if the owner has taken money out of the business, drawings, cash outflow should be minus. What there is a decrease in loan, that means we repaid the loan, we paid the money, minus, it's cash outflow. So taking all these 4 items, we decide net cash flow from financing activity and bring it in the external column as to the net amount from financing activity as minus or plus based on whichever is greater. The second last item of cash flow is cash flow from investing activities. Now here we take into account only non-current asset disposals and purchases. Increase in non-current asset purchase means we paid the money, cash outflow. Decrease or proceeds from disposal of non-current asset, cash inflow. Adjusting these two, we'll get net cash flow from investing activities. So usually these two are not difficulties in any cash flow statement for most of the exercises that is practiced. These two are coming only from balance sheet items, whereas the cash flow from operations has got something taken from balance sheet and something taken from profit and loss. There are 2 ways in which we can identify the net cash flow from operations. We'll take from here with the alternative method I have got. Net profit is taken from the profit and loss. And to the net profit, if you find in the profit and loss non-cash expenses. Non-cash expenses in profit and loss can be depreciation, write-off of borrowing cost, any discount, bad debts. Non-cash expense means we did not pay the money out, so that should be added to the profit. Less non-cash revenues or gains in profit and loss. Non-cash revenues can be profit on sale of any of the asset can be discount received. Now that amount of non-cash revenue was not received in cash, so that has got to be negative. Increase in total current assets. In this case, I took 450 because we incorporated insurance prepaid as a new current asset, 450. So when we have got a new current asset, it's equal to increase in current asset. That means we are paying out money. It should be minus. Decrease in total current asset is equal to decrease in assets, that is leading to disposal cash inflow. So decrease in total current assets here should be positive cash inflow. Increase in current liabilities. If we increase the liability, that means we get more money in. So it should be positive. Decrease in total current liability cash outgoing. So taking all these items, the net amount is net cash flow from operation. You can adopt this method if it is given to you in the exam with a profit and loss and balance sheet. You may not be able to adopt this method if in the exam, instead of giving profit and loss statement, the question says the cash sales. That means cash comes by selling goods. Cash received from customers. So this is the way the cash comes. But in my example, I have taken an increase in debtors. So we didn't get the cash from debtors. We have not got cash from debtors. So we have got 24,000 yet to be received out of the total sales of 36,000. Cash purchases, we are paying the money out. Cash paid to creditors and GST that we received, and GST that we have paid to tax office or insurance or anything, that comes as outflow. GST received comes as inflow. Cash paid to creditors comes as the outflow. Cash purchases is also outflow. Outflow will be minus. Inflow GST received is plus. Payment for any expenses. In the trial balance you have seen earlier, I had 26,000 paid for various expenses. So that's an outflow. I took only insurance separate there because in the trial balance I had this separate. The insurance paid is 1,350 as an expense payment, plus also we have paid prepaid. So this is a cash outflow. So when we are in the cash flow statement, our mind should be only about how much of cash comes in, how much of cash goes out. So by summarizing all these, you find 15,800. So whether you follow this method or you follow this method, you will get the same answer in both the methods. Obviously, you know that you can't have both in one cash flow. And most likely in the exam also, you will be given an opportunity to go according to this or according to this. And mostly you will be tested only about the cash flow statement, cash flows from operations only, because balance day adjustments, most of them affect only cash flow from operations. The last impact is in Sunshine Industries, what happens in the next following year, in the subsequent period as of 1/7/2023 in General Journal. The insurance that was prepaid, which existed as an account balance, will be closed. Insurance will become an expense 450 debit. This is to adjust the prepaid. In the following year, we are going to use up the insurance. Usually, the bookkeeper or accountant is not the one to be doing this. And it is not really supposed to be done on 1/7/2023. If you go by when it was used up, we know, we have seen insurance per month is 150. So we should have an entry on 31st July prepaid insurance we should close by 150 and bring insurance expense 150. Then again on 31st August we should have the same entry repeated, 150 150 each. And again on 30th of September we should have another 150 each. So we should be really having 3 monthly adjustment entries. This is not done in reality by accountant or bookkeeper. This is done only by qualified accountants who is preparing the financials of the entity. This is not done. So I took the example of 1/7/2023 because if bookkeeper or accountant wants to do anything, they will reverse it fully. They won't wait for every month to write off 150. That's a nuisance for them to remember. Every month they have got to go for writing this prepaid insurance 150. So they will reverse whatever adjustment that was done on 30th June, that will be reversed immediately on the next day. When that entry of general journal goes into Sunshine Industries general ledger, in the subsequent period, insurance will get debited on 7/2023 450. If you remember, on 30th June it was on the credit, this prepaid was on the credit. Now we reverse it out so that it becomes an expense insurance for 2023 and 24 year. I put it as next year start. If you understand that, you know it should not be on the 1st of July because it should be done on the day when that prepaid is used up, which will be on 31st July, 31st August, 30th September. But in classroom education, you are going to learn how to reverse it. And to reverse it, the prepaid insurance as current asset, we had on 1/7/2023 a balance of 450 that will be transferred out to insurance. So this 450 will make prepaid to have account closed, no balance carried out. We'll have insurance as an expense. The same thing is presented in the other form of ledger, which is used in reality, where the columns are similar to your general journal, except that you have got a balance column and another column towards the end of balance column to show whether that balance is a debit balance or credit balance. Insurance account, expense account will be debited on 1/7/2023 with a prepaid 450, and because this amount will be on the debit, balance will be on the debit, and we say it's a debit balance. This is not to be confused with your year-ending entry I showed earlier. So I put this as following year in the financial year. You're going to enter in prepaid insurance ledger account. It will have on 30th June, we would have created the prepaid 450. It will have a balance on the debit side 450. And we would have taken that in balance sheet on 30th of June, balance 450 debit. Now on 1/7/2023, we are closing this account. We are transferring or reversing out what we had here. The entry that we had earlier on 30th June, we are reversing it on 1/7/2023. To reverse means whatever balance was there, you put the same amount of balance from the running balance account. If it was on the debit, you put it on the credit. If the balance was on the credit, you put it on the debit to close it out. In the subsequent year, Sunshine Industries, if the adjustment is not addressed by the bookkeeper or accountant, assistant accountant, what happens in trial balance on 30th June 2024? Trial balance, as I mentioned earlier, it is a list of account names, their balances on the debit, their balances on the credit, and then check the two balances are equal. If that insurance was not addressed by bookkeeper or assistant accountant, what will happen is, for the insurance, what was paid on 1/10/2023. I took the date 1/10/2023 because we took the example of 1,800 paid on 1/10/2022. 1 year ends on 1/10/2023. On that date, we have to pay insurance for the following 12 months. I took a marginal increase of $200 to make it as $2,000 as the total money paid on that date. And this $2,000 paid was not adjusted with any prepaid insurance we recognized on 30th June 2023. So the prepaid insurance on 30th June 2023 will appear as a balance on the debit side. What happens if the adjustment is addressed in subsequent period in trial balance on 30th June 2024? We come directly to this insurance here. You can see the amount has been increased to 2,450. This includes the amount paid on 1/10/2023, which is 2,000, and the other 250 that you saw in the previous slide, that was relating to the prepaid of last year. Prepaid of last year was an expense for the current year, so the insurance will become 2,450 and won't be any prepaid insurance balance.